Now, in these videos, when we talk about commodities, we typically tend to pay more attention to oil and gas and the precious metals, the largest of the commodity markets. However, with everything that's been going on this year, we've been paying very close attention to what's going on under the surface in soft commodities and agricultural commodities. And what we've seen here over the last couple of weeks is some very interesting potential topping patterns in those spaces, which could mean that inflation has peaked or is close to peaking. So let's jump right into it. First and foremost, what I have up here is weekly charts today, and we're taking a look at the Bloomberg Commodity Index. Now, this is all of the commodities, but you can see over the last couple of weeks, as a whole, the commodity space is down about 12%, right? When we jump in and we specifically come in and take a look at soft commodities, you're going to see some very interesting charts. We're going to start with soybeans to begin with. Now, what I have up here, again, weekly chart going back 20 years. We got 2003 over here. We topped out in that 2012 zone right here just above that 1700. Well, here we are a decade later. We ran into that a few weeks ago, and we have been rejected from that zone, and we have sold. And in fact, we have fallen back below that key level of support that was in play for the majority of the year. This looks like we could have a major decade-long double top failure at that resistance zone. Next, when we take a look at soybean oil, we get a very similar look. Now, this had been a market that had broken out to all-time highs earlier this year. Look at the last 3 weeks, from 80 all the way back underneath 70 and breaking below that important zone that comes into play from 2008, right? Those were the 2008 highs. If we continue to fall underneath of here, we don't really have a lot of support until we get to last year's lows in the low 50s. Next up, we'll take a look at oats. Oats had an unbelievable, explosive breakout in the middle of last year and pushed all the way up, and then created a trading range in between 600 and 800. We had resistance up here around that 800 zone, and we had support down here around that 600 zone. Look at this last couple of weeks. We have fallen all the way back to 500 in basically a waterfall fashion from 660 all the way to around that 500 zone, heading back towards that all-important 460 level, which was those two major tops from 2009 and 2014. So what happens right here is really important on this chart. But this doesn't look like a super strong uptrend anymore. This is starting to look like potentially a topping pattern on oats. When we take a look at the larger contracts, wheat, for example, we know we had seen some explosive moves because of all that was going on with Ukraine and Russia. Look what we ran into. We ran into those highs from 2007, 2008. That's where we failed. And if we draw this line right here, just underneath of 1,000, right, we get the important zone in here, the important zone from 2012. That's where we had the breakout. We fell underneath of it over the last couple of weeks. Again, from like 1,100 down to around 900, just kind of that straight selling. Now, this chart's not necessarily completely broken. It's still got a really nice rounded potential base, but it needs to hold this zone because this is that breakout. A move underneath of that might be the end of the move in wheat. Next up, we'll take a look in at corn. Corn, another multi-decade potential top, double top pattern, right? 850, couldn't even get up to that 850 zone. This is 2012, and here we are 10 years later. And look at this. We're even underneath of that 740 support zone, the high from last year, a move back down towards that 660 area. These do not look like leading charts anymore like they had earlier in the year. Now, we haven't taken a look at this one before. I'll throw this one up here. This is milk futures. Look, they don't go back that far. There's a couple of years gap in here, so these dots right in here are actually missing years like 12, 13, 14. But here we are starting in 2021, and we've pushed all the way up. And even over the last couple of weeks, we have that sell-off there in milk futures of around 12, 13% or so. So that could be some relief at the grocery store. Next, we'll take a look in at hogs. Hogs, it looked like we were going to have those meat prices continuing to just really push higher. failed at this resistance zone at 120, has pulled back a little bit, as is stronger than a lot of the soft commodities, but is still showing a little bit of weakness here. We take a look in at live cattle as well, kind of topped out around that 150 and it's kind of been grinding lower, but sitting on this major level of support. Now, mind you, the hogs and cattle are actually tied pretty well to those soft commodities because that's the input cost. Grains to feed the cattle, and if those costs come down, potentially you could see hogs and cattle have lower prices if we move forward a quarter or two. So the takeaway from this is we had this area flying higher in the beginning portion of the year, right? We're really, really concerned about inflation in the food area. Part of it was geopolitical. And of course, just inflation and general. We've seen those areas of the market really kind of pull back here over the last couple of weeks, some of which have just had some incredible moves lower, like that Oats chart that we took a look at. And this really could be that kind of, hey, inflation might be slowing down a bit here, may have topped out. So the inflation numbers that we see here in June and July are going to be really, really important because if we can see that CPI number come down, that would be a very positive thing for the overall market. So we're going to continue to pay attention to the soft commodities because they could be that canary in the coal mine in this market environment. As always, I hope you guys have yourselves a fantastic day. I will see you all tomorrow. Take care.